Trader. We have a very special guest with us in the studio for our live today. Raul Arias from Trade. He was here with us a couple weeks ago, and we had and people wanted to see him back. And Raul's been doing some trading in our Discord in our live room during the week in Spanish. But we've got a large request for Raul to come back and do some work with us in English. So we brought him back today. Raul, how are you?
How are you guys?
Great, great. We're very happy to have you. Thanks so much for coming and joining us today. Tell me, how was your weekend?
It was great, family time, just relaxing quite a bit.
Nice, nice. How's the weather by you?
Pretty hot, man. It's
Here
really, really
too.
hot
Yeah,
here. Yeah, it's like
here too.
yeah, it's not as humid as Florida, but yeah, it's pretty hot.
Nice. Well, so I know we have a kind of a shortened week this week with a U.S. holiday, so there's
Mhm.
probably not going to be any much trading for tomorrow. But what have you looked at? Tell me about last week. How'd you end up?
Last week was pretty cool. As a matter of fact, in last week's live, the Spanish live, I did explain a few trades on Nasdaq. I've been trading quite a bit the Nasdaq, and basically took around two trades only, and they were profit. So
Nice.
it was a great week.
Both on the Nasdaq.
Yeah, yeah.
Did you showcase either of those in the live on Wednesday?
I did show people how.
Maybe you could take us through those today. And what about
Sure.
what about any other charts you're looking at? What else is in on your radar screen?
Today, basically, I was actually trading gold, looking at some scenario for euro dollar, but it wasn't really that good. But gold
Okay.
was a trade. It was a buy. We could have a look at that as well.
Okay, awesome. And then what about economic calendar? Do we have anything this week that's piquing your interest or, getting in or staying away?
Well, this week itself, I believe this week we have a non-farm payrolls, so it's going to be a good week. On
Okay,
Friday,
good.
we have that news, and then Thursday, we have a few events right after the holiday. So it's going to be, I think it's going to move pretty good towards Wednesday to Friday, basically. So yeah,
Awesome. And
I'm
now
looking
do
forward
you
to that.
do you typically trade stay out of it, wait for some direction, or are you front running it?
Personally, I do not trade the non-farm payrolls. I like to see the reaction to it and then probably go in it right afterwards, but not
Got
before
it.
it. I try to stay
And
out of specific news events such as the interest rates,
sure, volatility.
CDI, and non-farm payrolls. Those are the three that I do like to trade, but right after the market kind of gives us
Right.
some
Once you get some
movement.
direction. What
Yeah.
and what hap- to get in those?
Euro dollar is my top favorite in forex, and then gold, and well, Nasdaq is something I'm actually incorporating lately. So I'm
Okay.
gonna work it out, see how it goes with that one.
Nice. Now for Nasdaq, are you going to use the same strategy, or are you going to have to adapt your strategy a little bit?
Same one. I think the only change that we do in the Nasdaq and gold is the amount of stop loss kind of varies because of the volatility in it. But
Hmm.
other than that, it's the same strategy. I don't change it.
Got it. So the divvy trade strategy is same across the board, or does it move or change at all for any different pairs?
Well, we do have a basic one in our YouTube channel, totally free. It actually has English subtitles, so it's a general strategy like for the entire community. For the private one, I do manage another one. Not
Tell
as
tell us where
different.
tell us where we could find that. So if some because we have had a lot of people ask about your strategy. So
Mhm.
you didn't just go to Google, type in Divvy Trade FX, and then the
Yeah,
YouTube, and it's in there.
yeah. It's YouTube DV Trade Effects, and then there's a list of reproduction with you could actually see it. It's private mentorship in Spanish.
Okay,
But the good thing is that I did put English subtitles on those videos so anyone could actually see it.
great, great. That's what
Yeah,
people were looking for. They're looking for trading strategies and kind of how to get in and
yeah,
out. So maybe you could take us through it.
yeah,
Why don't you pull up a chart and give us a little bit of a kind of a high level overview of the public. We could see,
for
how
sure.
Divvy Trade gets in and out.
Yeah, well, basically, my strategy, I try to make it real simple. I think I did mention it before. I don't like to make it complicated. Just quick rules, structure. I like zones of interest, and then if there's any liquidity. That's basically the main thing that I look at in my charts. Obviously, structure is one of the main goals, the main points to it. Just to have a daily bias, because I'm more of an intraday type of trader.
Hmm.
So I don't know. Let me just reduce my screen a bit because I know this one's quite big and might not see it as good.
Got it. So when you say you're intraday trader, are you looking on larger time frames and then dropping down to smaller time frames for confluences?
Yeah, but it's quite unique because I do like to look at higher time frames. For example, in my case, my direction is based on either the monthly, weekly, and daily. Those are the three time frames, and I did speak about this in the live last week. I was telling everyone, if you want to get a good bias, you need to know what those time frames are doing. And then I use 4 hour, 1 hour. I don't like to go below that nowadays. Probably sometimes 15 minute, but mostly
Okay.
just 1 minute is like my end there. And then according to the bias that I get on the higher time frames, then I can use refinements to get in that flow using the 4 hour and the 1 hour time frame. So I don't
Gotcha.
use lower time frames than that. Most people that trade like I do, they like smaller time frames, 5 minute, 15 minute, 1 minute. I'm not a big fan of that. I used to trade like that quite some time before, but I didn't find it like as beneficial as I see it
Uh-huh.
with the higher time frames nowadays.
Well, give me some perspective. Why? Because you're right. A lot of people love to go down to the lower time frames to take those entries. Why have you found that to be not as good for you?
Well, I think one of the main things that I was looking for when I was developing the strategy, and just it's not something that is only unique to me, and a lot of people know those concepts, right? But one of the main things that I was looking for is a good flow of the trade. It's like when I used to use smaller time frames, it was like just a quick move. I
Hmm.
took a buy and then it was a quick move and then all of a sudden it just went back, against me. So I was like, you could get moves, you could get, certain trades throughout the days, but I wanted longer moves, right? I wanted to take like a big piece of the pie. And that was one of the main reasons why I decided to start moving up in time frames. So I noticed that if I was, in favor to the daily time frame, I could get like a whole move of the day. If not the whole move, the big move of the session that I was trading. I personally trade in New York, so I like to take that big move of a trade. So like on a daily basis, there's something that everyone should know, and it's easy to know. We're actually working on a daily candle, right? So the daily candle or whatever candle you're looking for, you have four components. You have an open, you have the low, you have the close, and you have the high of the day, right? So I like to, if it's a bullish day, I like to go, either at the open or below the open or a bit above the open, but to kind of get in that ride of the whole move, right? For the rest of the day. And then, I get out. So that's basically like my was my main goal when I was, developing my strategy and moving into the higher time frames. I wanted that big move, right? And that kind of gave me like more satisfaction towards the end. Plus, more freedom because when you're into the lower time frames, you're actually like looking at the chart all the time. So
Right.
psychologically, it doesn't help a lot. You kind of get frustrated. So if 1 minute is breaking down and then 5 minute breaks up, I think I should take the buy, and then it stops me out. It's a whole game that I was not into anymore.
Right. Well, let me ask you this, because for a lot of traders, they stick to the lower time frames because maybe they're not as committed to their strategy or they're not as committed to their setup, and they feel like they could get in and get out quicker and not have so much exposure in the market. What happened for you, psychologically, to allow those trades to run longer and, trust your strategy more that you were going to come out profitable in a longer time frame?
Yeah, well, in the end, lower time frames for me is noise. So,
Hmm.
like for example, let's say I'm in a zone, whatever the zone is, right? And then on a higher time frame, you could see and you say, I'm gonna buy here. So you buy, right? And whatever the time it takes for it to develop, in the end, it's gonna do this, right? Now, if you're looking at that same scenario, but from a lower time perspective, you're gonna see this, and then you're gonna go in the lower time frame, and you're gonna see a bunch of things going on. And in the end, it's gonna do this, but this whole idea is gonna confuse you because of the
Right.
noise, right? You're gonna have a lot of candles moving up, moving down, breaking up, and that noise for me was not beneficial at all. Not psychologically, not in my profits. I had more stops than wins back then. like more trades. Nowadays, I only take two, three trades, maximum of five trades a week. I don't take as many trades, to be honest, and that gives me some, gave me a lot of peace. And perhaps some people are looking into improving their strategy, and they're, struggling with the lower time frames, thinking that's the only way to, get around. And in the end, it's not beneficial. If you're getting a lot of stops, if it's really hitting you emotionally and psychologically, why do you stay on the lower time frames? Just move on to the higher time frames. In the end,
Right.
institutions move towards higher time frame goals. So that's the main goal in the end for me.
Got it. I understand. So, in your coursework, do you find a lot of people that come into you and maybe they're scalpers or lower time frame traders, and you takes you some time to kind of persuade, start looking at the higher time frames?
Oh, for sure, for sure. We have a lot of students that come with this because it's that big topic about smart money and a bunch of institutional concepts. Which I mean, towards the many years of experience, I've noticed that it's just a price action, right? But
Right.
then it's all marketing, right? So a lot of students that I've taught, come with those concepts of smart money and lower time frame trades. And then when I do ask them, like, do you feel comfortable with that? Are you getting, good results? What they answer me is like, well, I'm not getting results. That's why I got the mentorship. So I was like, okay, if
Right.
you got the mentorship, why don't you just go with what I'm gonna teach you? And so it's a difficult process with some of them because they have to change their mindset and just move away from those lower time frames because they have some sort of need of putting a trade every day. It's like some I don't know, feeling that they have to take a trade,
Absolutely.
and
Well, they're going to
that
be a
happens.
trader, you know? Everybody wants
Yeah,
to be a trader, but the main thing is you're not a trader, you're trying to make money, right? The
yeah,
end goal
nah,
is to make money, not to be a trader. So
for sure.
breaking that habit, I've found over the years with traders and kind of coaching them, mentoring them, has been very hard. They want to take more trades,
Oh,
more
yeah.
trades, more trades, but that doesn't always equal more success.
Nah, not at all. As a matter of fact, the first skill that you need to manage is patience. I mean, you
Right.
just gotta be patient. That's the first thing I think you need to develop and you need to, work on is your patience. Because in the end,
Especially going time frame, because there's
oh yeah,
people, they want it now, they want it now, they want it now, and waiting is just exposure to the market, exposure to negatives, exposure to the downside potentially. So you have
for
to
sure.
be able to, and I find that, I'm sure you would agree, I find that people who become more confident in their trading strategy and reading the charts and reading their setups are able to develop more patience. It's the
Oh yeah.
lack of confidence that causes them to be impatient.
Exactly. And the only way to get, good confidence is to start understanding those high time frames. It feels good, when you get a chart, you analyze it, and it goes in your way. It's like, I was thinking gold was gonna go up, and then it does go up. But the criterias of it for me that makes me more comfortable is, hey, I was trusting the higher time frame, not a
Right.
lower time frame, not a 1 minute. 1 minute's not gonna give me a good direction.
Hmm.
And sometimes it could work, right? But this is consistency, through the time. If you're gonna hold yourself, if you're gonna be a professional trader, if you're gonna, be consistent in these markets, you need to understand the higher time frames. And for sure,
Right.
I've actually studied that, with my students. Like, out of all the students that I've received, and the majority that trade with lower time frames, like, how long do they last using lower time frames? And it comes out that after a few months, they come to me and say, I think I'm just sick of the lower time frame. It drains you. It,
Right.
makes you
Right.
like,
Well, it's
you,
nonstop. You really don't get
oh,
any peace with it. It's
not
very
at all.
fast.
No, it
Awesome.
frustrates you a lot. I'm not saying that people can't work with lower time frames. I mean, if they have enough experience, if their mentality, their psychology is pretty good, and they see results on it, you're good. I'm not here to say it's bad. But personally, for me, I don't find it beneficial. I find it like pretty stressful. It drained me a lot. So it pushed me to just go with the higher time frames and get better results in my case, right?
Got it. Perfect. Okay, good. So now we've talked a trader into looking at higher time frames. What's next?
Once you have the higher time frame, then you need to have rules for your setup of entry, right? Like, it's as simple as, any sort of strategy. A lot of people use indicators, like,
Hmm.
whatever it is. I don't use indicators. My charts are pretty clean. I just look at the zone, and I like a confirmation. My confirmation, or basic confirmation that I do have in my course, is a break. I like liquidity in a specific zone, and then just go in it, you know. But my entries, because I did mention it in the previous live we did, my entries are always on higher time frame levels, right? So higher time frame levels for me, the only two levels that I look for personally are wicks or resistance or supports, right? And any sort of price level, which is basically an open of a order block, for me. That's what I call it. So I only look for those 2 points once I have my setup. So once I have the entire bias that let's say today I wanted to buy on gold. So once I buy on gold, I need a confirmation. I need the price on a specific zone to break, and then I look for the retest and just go up. That's as simple as it sounds. That's what I look for. Because in the end, my main trick or key is the higher time frames, right? It's the direction. If I'm in favor of the direction, I could use any type of entry. I could use the indicators to help me go in. I could use the break that I normally use. Any sort of entry, I could use it just if I do know the direction of the day. That's the main thing. So like for example, like today we got a buy around this area on gold, right? We have an area, like let's call it a support, right? And then on the lower time frame, specifically 1 hour, basically I didn't have like a sort of break, but I do have a pattern that I do like to look at. And let me show it to you guys, perhaps on the I didn't get this one here, but for example, for me, I like a pattern of trading or an entry, which is the break, or a pattern, which is something like this, right? So, like I said, I like opens of order blocks. So I like this move and this reaction in the zone that I was looking for in gold today. And then the retest to it, which is this, was basically my entry, right? So this is what I call like one of my patterns. I usually look at this one or this specific pattern here, which is basically an order block, a regular order block, but the push to the upside determines to me like a break, right? If you look at this on a lower time frame, 5 minute or lower time frames, you're gonna see this. But I don't need to go to a lower time frame to see that. I just look at the pattern and I know this is a break on a lower time frame. So once I have that and going in favor to the direction that I'm looking for, I just go ahead and go into the retest and I'm in. And I was able to take this push. I'll be putting on my Telegram so people could see it. We did take that
Awesome.
buy all the way
So
up here.
we took the buy, and talk to me a little bit about your your target and your stop. So how
Oh
do
yeah.
you determine? So you've got a setup, you got an entry. Tell me about your how do you write
Yeah.
it? How do you exit it? How do you protect your
So,
downside?
so the entry is the most important thing for me. Aside from a stop loss, obviously you have to use a stop loss. But let's say on gold, I normally use a 20 to 30 pip stop loss, depending on the scenario. For example, here my buy was right here, and then my stop loss was just below the low, right? So I was not expecting gold to come and push me or stop me. And if it did, because it could happen, I had another area around here, which is a 4 hour area or daily area that I had there. And I was going to wait for the same thing. If it gets there, break or a pattern and just go in, right? So in this
Got it.
case,
Got it. So
basically
if it broke down there, you were looking to take another trade around
into buy.
the 4 hour low.
Yeah. And I was like in 4 hour, I had this area around here, right? So if it did stop me out, I was not going to change my perspective. That's something that happens with a lot of traders. A lot of traders, they have a scenario, they understand the direction, price gives them a trade, stops them out, and then for some reason they stop trusting the entire analysis. So they get stopped out and then they just start looking for sells. And then it comes down to here and then it stops them out again. Right?
So
So
many
like
times, right? So many times.
it happens.
The right, exactly. A stop out or your first direction was wrong, and they totally changed their analysis. Oh, it must be a short day, and I see
Exactly.
that all the time as well.
And that's one advice that I can give everyone. I mean, just for the fact of getting a stop loss, that does not determine that your analysis is bad. Perhaps
Right,
price needs to go for another level. It happens. And it's gold, for example. Gold is a lot of
right.
wicks. I think we had a news event at not 10 in the morning, New York. So, that made the price move quite fast. So I was just going with my analysis. I took it. And if I was going to get stopped out, I was going to get another buy here because my entire bias on the daily time frame, which was the one I used today, was bullish, right? I did my analysis last night and I was just expecting to buy. So I got the first pattern here, I got in, and then just to answer the stop loss and the profit levels, I like to put my stop loss below the low. I don't like to exceed a 30 pip stop loss on gold, right?
Hmm.
And then my profits or my goals are the highs,
How
the
far
next
below
one.
the low? I can barely see it there.
This is like 1 pip, 2 pips. I
Okay.
add the spread, whatever the spread you might have, just add it up.
Hmm.
Because you have to count that you have spread on gold and all that, right? So that'll be my stop loss, and then my take profit will be the highest. So this will be my first TP.
Right.
This will be my second one. Normally, when I take a trade, I don't put a TP. I don't put it manually. I just like to look at the development of the trade, and if it's getting to the first objective, or if it comes down really hot, really strong, I'll just take profits. Like I took profits right after this high was taken, right? Because I like the way the price got to this high. It broke, really bullish, like with enough
Yeah,
strength.
absolutely.
So I was expecting that to go a bit higher. And then when it took out this high, I took a profit. It was a 1 to 4. So I did take some partials out, and then I'm still in that trade. However, if it comes back, I already pay myself because I'm intraday.
Right.
So I like to
Right.
pay myself.
So where are you moving your break even to as you take it out, or your
But
stop off as it goes
I
out?
have a rule for the break even, and it's whenever I'm at a 1 2, I put myself on break even.
Okay.
Right? So 1 2, I
So
put
you
break
lock
even.
something in.
Yeah, like a bit above it, just to kind of recover the commissions or whatever it is. But I put myself on a 1 to 2 right above it, and then I just let it go. If it comes to take TP, I'll just take out some partials and I'll leave it there. If I'll just wait for the price to kind of develop, because if you see here, you got a new impulse. So this could go ahead and do a really nice pullback and then do it again. So I don't like to
Right.
stretch my break even to put it here because I'm very exposed to getting out. So I just leave it there. I'll just wait for the day to develop, see how it is tomorrow, and if probably we get this and then a new high, then I'll just move the break even to this level, right?
Got it.
So that's
So
that's the way I do it.
you plan on holding this overnight.
Oh yeah, for
All
sure.
right. And
I
typically
mean,
your trade duration, are you typically 1 to 2 day, overnight, intraday?
well, when I pay myself, I had trades back in 2021, I believe. I had a trade on euro dollar. It was very high. Let me just show you real quick on the daily, actually on a weekly because you won't see it now on the daily. But back in 2021, I took a trade like over here, right?
Hmm.
So I took a sell. I paid myself on 1 to 5, and then I just put myself on break even. As price was moving down, I was moving the stop loss, the break even, and it ended up being like how long did I take? Like 6 months trade, just a little
Wow.
partial there, you know. And I like to do that because it was like I don't know 0.20 of lot size,
Hmm.
and it ended up towards the end of the year of that year, I ended up having I think a bit more than 2K 3K just running there, It wasn't interrupting me anything. I just wanted to see how the strategy was going and if I was gonna get a very good trade, at
Nice.
first swing
Nice.
type. So those little partials, you could leave them, and I like to leave them because I know that they pay good. If I'm just leaving something that I don't really care about because I already paid
Right.
myself,
Right.
right? That could add up to your
It's
account
just
really
it's kind
good.
of like leftover. You've already got your profit from the trade. See what
There
happens
you
with it.
go.
Now, would there be a case where, let's say it starts to your thesis starts to break down, right? It starts
Hmm.
going against you. Um,
Hmm.
before, are you going to pull out before it hits your stop loss? Could you have a feel for these positions enough that it says, hey, you know what? I think sentiment's changed. It's going against me. I'm going to cut my losses short. I'm not going to go all the way back to whatever
Well,
my stop loss is.
since it let's say it starts moving more highs, and I just start moving the break even, So eventually, if the sentiments change, it's gonna stop me out at some point. But if
Got it.
again, I will have a partial, like a bit more.
Hmm.
So like I don't really stress on those leftovers because they could pay really good or they could not pay. I mean, in the end, it's something that I should not care about. If you want to
Right. So
start
you're not
practicing.
accounting for that in your overall profitability schedule. It's more of an add-on bonus for you.
Yeah, it's an add-on, and just to see how long of a, development of trade I could get, throughout time. So that's what happened on the euro dollar. I was never expecting for price to drop that way, how it did back then. But it did teach me a lot. A trade could run if you know the bias, if you know the direction. It's not that you should know all the time, and we're not guessing. We're just having a strategy, and it's giving me an idea of what the price can do. But I was never expecting price to like drop that much on the euro dollar back
Right.
then. I
Yeah.
was just
Right.
expecting it to kind of drop down here, and then like when it
Yeah.
got to
Find
this
find some
level,
support. Sure.
yeah, like right here, I was expecting price. 'Cause I took the sell here, so I did take a few weeks, of sells. I was like, when it gets here, it might change everything, right? But my break even was like down here somewhere, right? And it just kept going down. So I was like, well, that's neat. You learn from that. And
Sure.
then price decided to pay me pretty good.
As far as duration goes, let's say you're not in one of these add-on bonus trades where you're just leaving in the
Mhm.
tails on. Let's say you're in a full-on trade. You're allocating what you typically allocate. And by the way, what do you typically allocate? Are you doing 1%, 2%?
No, I normally risk 0.5, no, half
Okay, got
percent.
it. Oh, got it. Okay, so you're doing 0.5. What's the max duration you would take that trade for? So let's say it's just going sideways. It's not really working out. You're not negative. You're not positive. Um, are you gonna close that trade out and wait for more information? Or are you gonna
Yeah.
just let it run? What's your
Um,
pain threshold there?
the New York session for me, like what we call the kill zone, for me it's like between 7 a.m. and 11 a.m. So if I'm in the trade and then it's 11 a.m. and that's not going anywhere, just staying there, I'd rather close it and then just come back
Got
tomorrow,
it. Got it. So if it
right?
hasn't materialized by 11 a.m. Eastern, you're
I'm
you're gonna
out.
close it out and look for more information the
Oh
following
yeah,
following
yeah.
session.
Yeah, for sure. Because
Got
I
it.
hate to stay there looking at it every now and then.
Yeah.
How's it
Right.
going? Yeah, just you got to help yourself in your psychology. Even if you have a long time with it, like a long time in trading, you just got to help yourself out because it's the only way to be confident in the end. If you know that you can't just go out and you're just gonna keep looking at your chart or your MT4 in your cell phone, then just close it. Some
Right.
people struggle with that. A lot of people just what I
Yeah. It
used to
takes a
do with
lot of
some
mental
students.
mental
I
energy
remember.
to keep up on those.
I actually remember I did a live event here in Colombia a few like last year, and a few students came to a certain area in Colombia, and we stood for like 5 days. It was like a camp, boot camp,
Nice.
in life. And then I noticed that when we took a trade, because we were trading live with them, when we took a trade, I decided to tell them, you know what, we took this trade, let's go have breakfast. But then when we were in breakfast, I had a few students, looking at the chart because they were thinking about the trade that was running. So what I told them, give me your phones, and I deleted the app from their cell phones because it really wasn't helping. And towards the end of the event, they were like, you know what? I just decided not to have the app in my phone. I think it's gonna help me out. Just to trust my strategy, trust my entry. If I'm already in a trade, I don't have to keep looking at it. You already set up a stop loss. You already set up a take profit if you have
It's
one.
kind of set and
You
forget at that point, right?
yeah, you have everything done. What's going to change if you're looking at a chart? It's nothing's going to change. The only thing that's going to do is it's going to affect you emotionally. You're just going to be, praying for that trade to go in profit, or if it's probably almost hitting you down, then you're just going to be worried. It doesn't really help a lot. So that's
Right.
something I used personally at the beginning to help my psychology. I deleted the app from my phone, and whenever I was trading, I was in my computer, and then once I took the trade, I just decided to go out of my office. And then since I didn't have the app in the phone, there's no way for me to go back and look at the trade. It helped me out pretty good.
Got it. Yeah, I understand that for sure.
Mhm.
And now what about anybody who comes to you, let's say they come to you and say, hey, listen, I don't use stop losses. I set mental stop losses. Is this something you say, hey, listen, if you're going to trade with Divvy Trade, you've got to use a stop loss.
No,
You've got to follow the program.
you need to have a stop loss. You know,
Yes.
you need to have one because you never know with the market, right? I learned that the harsh way. One time I was trading, I think it was gold, and I don't know what news event came out, but this glitch in the system happened, some sort of glitch. I didn't even have a stop loss, and that burned my whole account, right?
Ah, yep.
If I would have had a stop loss, with the glitch, I know the broker would have done something, right? but I didn't have a stop loss. So there's no way for me to say, the glitch, it jumped my stop loss and, it's your fault, broker. It was totally my
Right. So
fault.
just for a record of accountability, you like a stop loss.
Oh yeah, for sure. It makes me comfortable because you need a stop loss in order to determine the risk management, right? Like if I'm aiming for a 1 to 2 or 1 to 3, you need to have a specific stop loss so you know what sort of lot size you should use. You can't just go
Right.
in there and just, I'm just putting whatever lot size is and I'm waiting for the price to go up. So I use stop loss. All my students have to have a stop loss. They have to use it. If not, then I just don't work with that person because
Right, right. Of course, it's part of the program. It's a best practice for
oh yeah,
all brokers for the most part, and there's very few traders that I chat with that don't use them.
but
So and I think it's the new people who want to, oh, I don't need it. I don't want to stop loss.
oh,
Until
oh
you
yeah.
learn the hard way a few times, it's
That's why that's why
you know
like
better.
I love the SurgeTrader program because unless you got that add-on of not using stop loss, but I think like most people don't use that, right? But
Well,
that
really, the people who use that are going to have a different strategy. They're going to be
oh yeah,
scalpers, and for scalpers, it's helpful not to have a stop loss because one, you don't have to set it. It doesn't take any time, and you're in and out so quickly. So it changes the dynamic a little bit. But when you're trading, especially like you, trading on larger time frames, it's almost a necessity. I mean, it's so
oh yeah,
difficult to do without it.
for sure. That's why I like the program because it forces you to use it, right?
Right.
And in a way, it's good to see that because I know you're trying to protect your capital. So that's
Yep.
good. Yeah, I think
Absolutely.
the rules for search are aiming to protect capital. So it kind of forces you to be more disciplined and to kind of, go along with that and say, I'm going to take this trade and I'm taking it seriously. It's real capital, real funds, right? So, I just want to treat it as it is. And I like that. I've never seen it before. Like, when you put a trade and if you don't have a stop loss, it kind of closes your trade.
Right.
It's kind of it's good. I mean, some people hate it, right? But it's good because it forces you to, hey, before you take a trade, you need to determine your stop loss. You need
Right.
to
Yeah. It
determine.
helps reinforce a behavior that's that's surrounded by capital preservation, just like you
Oh
said.
yeah,
So it's so
for sure,
important.
for sure, for sure.
Awesome. So I know you mentioned, so this is your gold trade. You're in gold. That's awesome. I know you said you had a couple trades last week on the Nasdaq. Can you pull those up and show us how those played out?
Yeah, for sure. I actually still have one running in a buy in Nasdaq.
Okay.
Let me look at this. I think it was oh yeah, it was right around this area, like right around here, right? So Nasdaq, if you look at it, structure, regular structure, we're still bullish, right?
Hmm.
On the weekly, on the daily, we're bullish, right? So my bias for those days was bullish, right? Now in this specific case, once you have a push, you always have a.
Bro, let me stop you for just a second. So you switched over to the line chart a minute ago. Now,
Mhm.
how often do you use a line chart to help determine direction?
I combine them both. I combine Heikinachi.
Hmm.
I don't use it now because it just deletes my replay. But let me do that. Let me do that. I use it every day, right? Like every day. Now I use it with the Heikinachi, which I explained last time. It was just
Yep.
basically like to see the most recent move, and then the line chart helps me look for that specific retracements, right? Like you have a push, which is very easy going here, and then you have a pullback, right? Which is this. Now, I like to see when the pullback comes aligned with the push that I'm looking. If it's bullish, then once the pullback comes in the same direction of the main impulse, then I'm good to go for a new move, a new very big move, right? So I combine them almost every day. I like the line chart because this is the most recent move, and I like to see the retracement here, right? Now, if you notice, last week we did not have this break, so it was a bit difficult. This week we have that break, which means that if you're looking into Nasdaq, we're probably getting a little bearish sentiment, but then we're just going to keep going up, or not. Saying that you are going to is I'm not assuring that, but it's a high probability
Right.
setup.
Right.
Press to come do a pull, push to the downside, and then just go back up. It's a probability, right? Now last week I only had the Heikki Nachi scenario. I knew it was bullish, and on the line chart we were bullish, right? So I was just expecting to go along with that bias, right? If daily, weekly, and even monthly they're saying bullish, then why would you go against that? Now you could take retracements, you could take sells, but in the end, the bullish is gonna be, like especially in Nasdaq, is very strong. The move,
That
if it's
majority
bullish,
sentiment's really where you
oh
where
yeah,
you're
oh
gonna
yeah,
find your moves.
like don't battle with Nasdaq. It's just a monster, right? So you need to kind of go along with the flow. So last week we only had this, right? So we had like price going up and we had a retracement. But if you look at the line chart, the retracement was not aligned yet with the main move, right? So price could have done this as well, right? And then probably just go back up, right? So last week I was kind of like in a doubt because I was like, it could still move a bit down. However, once this day broke, again, like today, I spoke to you that my confirmations are breaks or patterns. This is a pattern here, right? This is like a regular order block, be open. And I did like the fact that price had tap in this open of the order block. I like those levels, wicks or this type of levels. Those are my only levels that I certainly look at. There's a few more that I do talk in the mentorship, but this is like the most general thing, right? So once price tapped here and the daily candle did this, it was a little bit bullish. I decided to go into 4 hour and then a 1 hour and start looking at and see where could the price be going. If I wanted to buy because that's my main direction, I wanted this time frames, if not the daily, at least 4 hour and 1 hour to be aligned with that sentiment. Now, if you look at this right here on the line chart, you can see this. This is the whole retracement that you see on daily, but then in the line chart, you start seeing breaks to the upside, right? So that for me was like the first sign to say, I don't think this thing is gonna keep dropping. Maybe this is just gonna go, and push up and get this high and go along with the order flow of the daily time frame, right? So we got that first break. I look at Heikki Nachi as well. Let me just pull it up with the indicator because I don't want the replay to go down. Heikki Nachi. Right. So we got this Higinachi.
Hmm.
Okay, just a second here. So we have the Higinachi, right? So this is the move in Higinachi, and I was expecting this break per Higinachi, but the line chart was giving me this. So you could get. I used both of them just to see, compare. If both of them have broken, that's move is gonna go for sure for me. But if not, you can just start, building that idea that it might go up. So I did like this breaks in the line chart. And then if you notice, like 4 hours was turning out bullish. 4 hour was getting aligned with the daily, bias, which is bullish. So I got that. That was the first day. Nothing much happened there, but then I did have this. Once I have that, I like the zones that price gives me, which is around this area, right? I like extremes a lot. Not necessarily I take them all, but I like this. This was my new and most recent move. You could look at that easy on the 1 hour time frame, right?
Hmm.
So this was basically like something that I was looking for. And then, the next day we did have, the price coming back into this zone. I did take a buy around that area. You see if you get it here. There you go. So once it tapped this area, I was going in. Why? Because I already had the break on the 1 hour. I had a break here. Even on Heikinachi, I had this break right here, right? So I was just expecting the pullback, some liquidity to be grabbed, and then just go back up. And this is my zone of interest, which I was, mainly aiming for price to give me the buy. So we took the buy around this area. Again, the stop loss right below the low plus spread. So it gave me around 30 pips. With the NASDAQ, also I like 25 to 30 pips of stop loss, right?
Hmm.
And then my first TP was this high and then this one and so on. Now I knew that I was taking a high probability trade because I was along with the bias of daily, and then this is what happened, right?
So now,
Boom.
before you go, how did you size it? You said, this is a high probability trade. Is this one of your A plus setups?
Oh yeah, for sure.
Got
Like
it. So do
the
you
loss.
size it regularly, half percent?
Yeah, like one of the main things is you know your bias is bullish. Now you wait for the pullback. Now you could take buys here or here or here because eventually you're trying to go along with that flow, but it's not gonna work as it's not a high probability because the retracement is not aligned yet with the main impulse. Now, if you look at this scenario, 4 hour had already broken up. So the retracement was aligned with the main push of the daily time frame, right? So
Right.
let's pretend this is the daily push, and then the retracement, you could look at it with detail on the 4 hour, right? So when that retracement comes along with the main push of the daily time frame, then that's a higher probability, because in other words, it's giving me a certain alert that the new push is developing, and it started, in other words. Like once it breaks up, once that retracement aligns with the main push, for me it says that, the new impulse is going to develop, right? And that's why I just look for 1 hour, 4 hour to see where I could go in. I like the break here. I like the liquidity that I had here. I like the liquidity. For me is important. So like liquidity is basically a false move, like this push to the upside. It really wasn't like a real move for me because it didn't break anything. So for me, it's some sort of inducement. So that low for me was my first objective before the price goes up. Now, price could have just kept going up, and I would have just it wouldn't have tapped me in. Doesn't matter, but I do like to see the push. That's my first setup, the break. Then where the liquidity is. The liquidity is down here. So I like price to go and grab that liquidity, tap in my zone, and then I'm just gonna, program my trade. It's a buy limit. I'm not waiting for price to get there and then I'm just gonna put it in. No, I program the limit during the session, right?
Hmm.
So it tapped me, and this was around 10 in the morning, and that's 11 in the morning, New York, almost towards the end of the session. It tapped me in, and I just let it go. And once it did this first push, it was okay for me. Just let it run, because Nasdaq, you just have to let it play out. Nasdaq is gonna drive you crazy if you just, keep protecting yourself fast. So it
Right.
went back, tapped me in again, and then just push up. The next thing, which is the trade that I still have running, is this just went up and it's still going up, right? And this specific trade, I think we could hold it for a long time. Now let's see how it goes, right? But so far, that's like my main scenario, right? I like for
Nice. Now,
breaks.
did you took profit? You moved your stop loss off
Oh
it.
yeah,
You're just running
yeah,
a an add-on.
exactly. Now I'm waiting for this new move to develop in 4 hours. Like I'm waiting for that, because the price to come all the way down again and go back up. So
Sure.
I'm by break even. It's already here, like a bit above the entry. I already took profits when this high was taken, right? And then just waiting for that to develop. Now this specific trade, I did have to wait till the next day, because if you notice, the session ended up here and it just stood there. But I did believe on the trade, because I know Nasdaq moves a bit different. Nasdaq for me, it could move in the morning, it could move in the afternoon. There's the AM session and the PM session for me, right? So in Nasdaq, I do treat it a bit different, because I know in the afternoon you could get good moves as well, right?
Right.
Something that does not happen with forex pairs. In forex, it's just the morning, and then in the afternoon, unless you have a news event, you could get a good move. But other than that, you don't really get anything. So I don't. I close my forex or even gold, within 11 in the morning. But
Got
Nasdaq,
it.
I do like to let it run, because I know it could move in the afternoon.
And what
So I
about
did take
sizing?
profits.
Was this your typical sizing, half a percentage point of the
Yeah,
account?
yeah, for
Got it.
sure.
So do you ever have any variability on that? Let's say it's not an A plus setup. You're not as confident in it. Are you going to size down, or you're just not going to take that
Yeah.
trade?
If it's not a good probability setup, like again, if I have to push and then I'm trying to look, go along with the flow, but it hasn't, aligned yet, then I'll just reduce it half. If it's 0.5 my main risk, then I'll just reduce it to 0.25, right?
Got it.
If it's not a high probability. If it is high probability, I'll go with the 0.5
And
easily.
is part of your trading plan being able to determine if it's a high probability or low probability, or is
For
that something
sure.
you've just developed over time?
Oh, I've developed it over time, and it's part of my plan as well. Like I do like to determine that, because not every trade is going to be the same percentage, right?
Right.
Because of the conditions of the market, there could be a news event, certain things that might make me determine to reduce a bit the risk, right?
And how do you double down? Let's say you took the trade, it didn't go in your direction. Are you doing inventory management where you're taking a larger lot size next time? Are you going at the same lot size? Are you going in at a smaller lot size?
I go with the same risk, in the end, it's percentage for me. So
Got it.
my next trade, if it's a high probability, I'll go with the 0.5, whatever the lot size it gives me. So I have a unique calculator. I don't know if you want me to show it. It's
Yeah,
just
please.
I'll be happy to share it if somebody needs it. It's completely free. Let me just try to share that. Let me pull it up a bit, just a second.
Yeah, take
Let
your time.
me
I think you have to stop sharing that screen and then share the new screen.
Yeah, let me do that real quick. So, because this could be helpful. So, just a second. Let me share it again. Screen. So, um, let me see if you see it now. Do you see it?
It looks like it's yep, it just came up.
All right. So this is in Spanish, but it's general, right? So I like this specific calculator. Like I don't use an EA as a calculator, some position size calculators. I like a manual. So for example, let me just put it here. Search, right? So search. We have I don't know 50K account, right? So if I want to risk of from the 50K account a 0.5, this whole spreadsheet will tell me, if your stop loss is 1 pip, 2 pip, 3 pip, 4 pip, whatever it is, you're gonna get the exact lot size, including commissions, right? So my entire trade, if it goes to a stop loss, I won't lose more than $250, right?
Nice.
So
Nice.
it gives me like the exact measurement. So let's say my stop loss is 8 pips. I just go ahead and change it here to 8 pips. And then, 2.87. That's my lot size. My commission will be $20.11. It has the SurgeTrader commission, which is $7 a lot. And then, the total loss could be $250. And I won't lose more than that. I'll make sure with this specific lot size that I won't lose more than that because it does happen when you use the MyFX lot size calculator that it only tells you how much lot size it is, but it does not include the commissions.
Right.
This
Right. I've seen that.
includes commissions, so you have an exact lot size and you won't lose more than that. And another good thing is the RRs, like I got from a 1, 3 and up, it tells you like in money and how many pips you need to make, let's say, a 1 to 3. So for example, if I'm 8 pips, I got 2.87 lots in size, I won't lose more than 250 pips. Now my 1 to 3 would be when the price runs 25.2 pips. Now that will give me in money $704.02.
Nice. Yeah,
Oh,
this is a great calculator. I think people
so
would love this. If you I'll tell you what, we'll put it in the description. Do you have a link for it or is it a download?
it's a download.
Okay.
But just for people watching Search Trader live, we'll give it to them, just
Yeah,
for free.
absolutely. Absolutely. That's awesome. I'm gonna use it as well. That's great.
Yeah. And I just have it for like this, or different brokers, and it does help out really good.
Cool. Very cool. Thank you for sharing that.
Yeah,
Awesome.
for sure.
So as we kind of finish up here, what are we? I know you mentioned non-farm payrolls, but what else are we looking at this week and next week? What do we have on the agenda?
All right, well, just this week, non-farm payrolls, we do have a news event on Thursday as well, which is the ADP non-farm employment change. That's something good that moves around the New York session.
Hmm.
So I'll be looking forward for that. And in reference to chart wise, the direction and stuff, I will be looking into NASDAQ, Euro dollar, and gold. Those are the three ones that I'm actually monitoring for this week. On the euro dollar, and gold and even Nasdaq, I'm actually expecting a bit more buys. Probably not tomorrow. We're not gonna have enough moves, but the rest of the week and probably towards Friday or Thursday, we might have a push to the downside. So I'm looking for the price to go up a bit more, and then probably looking for the price to push down. In general, for the three of them. Now, gold is still bullish. So gold, I am looking for price to move up at least around this area around this week, like probably around here. And I'll see if it, just breaks it or just, respects it and moves down. I'm looking forward for that. NASDAQ is completely bullish. So I think in NASDAQ, I'm just gonna keep playing the buys. If you're trading NASDAQ or the CFD, just wait for retracements and then keep going with the flow. I'm just in for the buys for NASDAQ so far. It might change throughout the week, perhaps, but so far what we have right now is bullish moves. I'm looking for that, and then also on the euro dollar. But euro dollar, I am expecting to see what price does when it comes to this area. So I
Got
will
it.
be expecting that. That will be around, in this broker 1.09589 the price. So I'm looking for that. See how it goes. So far, it looks bullish for this remaining of the day. Let's see tomorrow. I don't think it might move much. But Wednesday or Thursday we might have more clear movement on this pairs.
Got it. Awesome. I'm gonna make a note. Next time we check in, we'll recap those and see how they
Oh
played
yeah,
out.
for sure, for sure. Let's see how it goes.
Awesome. Ro, thanks again so much. It's been very good having you and getting all of your insights. And I hope you have a great trading day today. I know tomorrow's going to be a little bit of a slow day, but through the rest of the week as well. And we'll see you Wednesday for our live trading in Spanish.
For sure, man. Take care.
All right, brother. Have a great one.
All right, bye bye.
Bye bye.